Differences between Islamic and conventional bank. What is Islamic bank? It is an ethical banking system which completely prohibits interest and operates according to Islamic law. Islamic banking is an asset-based financing, and it also doesn't allow prohibited trade elements. For example, one cannot take a loan from Islamic bank to open a wine shop, or Islamic bank do not invest in businesses that have any element of gambling. Conventional banking system, it represents an unethical and profit-oriented system. The main purpose of it is to make money, which is mostly produced through interest. Here are the differences of the principles in Islamic and conventional banking in Malaysia. 1. Interest. Islamic banks do not charge interest. Instead, they make money through profit sharing and trade. For example, if you take a loan, you won't pay interest. Instead, the bank might share profits from your business. Conventional banks charge interest on loans. When you borrow money, you pay back the original amount plus interest, which is how banks earn their profits. 2. Risk sharing. In Islamic finance, both the bank and the customer share the risks. For instance, if a project fails, both parties face some losses together. This is often done through profit-sharing agreements. While in conventional banking, the borrower takes all the risks. You have to repay the loan regardless of whether your project succeeds or fails. 3. Asset-backed financing. Islamic banking. All transactions must be linked to real assets or services. This means that if you get a loan, it should be for something tangible, like buying a house or a car. While conventional banks can give loans without needing to tie them to specific assets, they look mainly at your credit history and ability to repay. 4. Ethical investments. Islamic banks only invest in businesses that are considered halal. They avoid industries like alcohol, gambling, and anything else that goes against Islamic principles. Conventional banks can invest in any industry, focusing mainly on making profits without specific ethical guidelines. 5. Financial contracts. Contracts in Islamic banking must follow Sharia law. Common types include mudarabah, profit sharing, and murabaha, cost plus financing. Each type has rules that need to be followed. Contracts in conventional banking are based on legal agreements, focusing on terms like interest rates and repayment schedules without religious considerations.
Hello there! You will learn about the ethical and professional conduct of Islamic and conventional banking. But first, I will explain the ethical conduct of Islamic banking compared to conventional banking. Islamic banking is known for its ethical conduct because it prohibits interest-based transactions, which are considered riba. Riba, also known as interest on debt and interest charges, which is forbidden in Islam. Riba also considered unjust and exploitative. That's why Islamic banking has eliminated riba to demonstrate justice and honesty in financial matters. So, the absence of interest riba in Islamic banking reflects ethical conduct due it promotes fairness and equity by ensuring no party exploits another. When Islamic banking prohibits riba, it gives a positive impact on society as they prevent the concentration of wealth. The interest-based system tends to favor those with capital over those who rely on borrowing. Islamic banking, unlike conventional banking, because it operates with interest-based system. Banking requires borrowers to pay fixed or compounding interest regardless of their financial outcome. This practice clearly does not demonstrate ethical conduct, as compounding interest in cases of default can burden individuals and lead to inequality. To sum up, the absence of interest-based riba transaction is one of the major ethical principles and is very important to continue developing a community. To make it clearer, I will provide an example that illustrates how Islamic banking prohibits riba in Malaysia, in contrast to conventional banking. Islamic banking in Malaysia, like Bank Islam, use murabahah contracts instead of riba to finance purchases. So, what is actually murabahah? Murabahah is a cost-plus financing where the bank buys an item for the customer and then sells it at a markup price disclosed upfront, and the customer repays in installments. From the illustration that I had given, we can see that murabahah show an ethical conduct because the bank will tell you the cost price and the profit they are charging. It's also no higher interest compared to conventional banking. In summary, Islamic banking promotes an ethical than conventional banking. It is because Islamic banking transactions is transparent and compliant with Islamic principles. To present to you about professional conduct between Islamic banking and conventional banking. One of the principles Islamic banking that show professional is Islamic banking promotes a wealth redistribution. This has been proven when Islamic bank practice like zakat, mandatory charity, and profit sharing mechanism. Help for reduce income inequality and support underprivileged community. As an example, in Malaysia, we have Afiq Bank, which is an Islamic bank that promotes zakat funds to support education, healthcare, and community welfare programs. However, it is in contrast with conventional banking, as conventional bank lack professional when it show limited contribution to societal welfare. Conventional banks only focusing on maximizing shareholders' profit and don't have a structural mechanism to support the underprivileged. As an example, in Malaysia, conventional banks like CIMB, non-Islamic bank, only focusing primarily on profit-driven strategies without integrating community development into their financial. In summary, we can say that Islamic banking show more professional than conventional banking. This is because Islamic bank practice fair lending and avoid taking advantages from customers by charging excessive fees or penalties, unlike conventional bank. We are so grateful to have the Islamic banking system in Malaysia because Islamic banks ensure that everyone is treated fairly and respectfully. It is shown that Islamic banking promotes adil, transparency, and justice. Now, let's take a look at the example case happened in Malaysia, which is demonstrate principle of ethics and professional. I choose case Tan Sri Khalid Ibrahim versus Bank Islam Malaysia Berhad, which is Tan Sri Khalid Ibrahim as plaintiff and Bank Islam Malaysia Berhad as defendant. The plaintiff concerned about whether PBA loan agreement between Tan Sri Khalid bin Ibrahim and Bank Islam is a contract which adhere to Sharia principles or not, specifically the prohibition of riba. The plaintiff didn't like the way the bank was charging him for the loan. He thought the extra money the bank was charging him looked like riba. Based on this case, it highlights the importance of ethical transparency in Islamic banking. Moreover, this case also a reminder for Islamic bank to enhance their ethical standards by prioritizing transparency and professional. To sum up, this case demonstrates the importance of ethical and professional conduct in ensuring public trust in Islamic banking.
Here are some examples of banking practices in Malaysia. 1. Islamic banking practices. Bank Muamalat Ijara financing. This is a leasing product where the bank purchases an asset, like equipment or property, and leases it to the customer for a specified period. At the end of the lease term, the customer may have the option to purchase the asset at an agreed upon price. aligning with the principles of Sharia by avoiding interest payments. RHB Islamic Bank's Takaful products. RHB offers Islamic insurance, Takaful, products that operate on the principles of mutual assistance and risk sharing among participants. Customers contribute to a pool, which is then used to provide financial assistance to those in need, ensuring compliance with Islamic values. 2. Conventional banking practices. Hong Leng Bank's home financing. Hong Leng offers various home loan products with fixed or variable interest rates. The loans are structured to provide customers with flexibility in repayment terms, but they operate on an interest-based model, where the bank earns income through interest payments. Affin Bank's credit cards. Affin Bank provides credit cards that offer various rewards and cashback options. Customers can utilize credit lines, but are charged interest on any outstanding balance beyond the grace period, reflecting a traditional risk transfer approach where the bank profits from interest charges on unpaid balances.